Tyson and Beyond Meat in particular this morning. They are both trading lower after being downgraded and also their price targets being cut over Barclays. Both of them going to underweight from equal weight due, Barclays says, to the difficult outlook surrounding protein companies in general, although the downgrade didn't affect all of the protein companies in Barclays' coverage there. But they said the worst is yet to come for most of the sector because price-conscious consumers are facing rising prices for a lot of these products, as well as rising beef prices. So that's a challenge for some of these companies.
I'm concerned on what the worst is yet to come would mean for Beyond Meat. You can argue they have seen the worst the past year. Consumers have traded off of that product and traded down to cheaper regular alternatives like regular chicken, regular beef. So that's a scary note from Barclays on Beyond, and even to a lesser extent Tyson.
You know, one of the interesting things, I was looking back through the Beyond earnings report as well, and they're actually down for the 9 months that we've seen them report for thus far over the course of this fiscal year. They're actually down in every single category across U.S. retail, U.S. food service, and even international retail food service. So negative. Just kind of negative percentages that you've got across the board. So that is declines across the board there in their revenues. But here's the interesting thing. They're actually up in some of those key categories in terms of the pounds sold by channel, which is interesting because it means that they're actually taking a severe discount for everything that they are producing. So the overproduction met with the lower prices that they're able to just sell through some of their own inventory that they're creating. That creates a longer term issue if you're Beyond Meat or Impossible Foods, because that's a larger demand equation. And they had to cite that within their most recent earnings report as well. They had talked about this on the call, just saying that current economic climate has not been time to plant-based meat. I mean, no crap. But honestly, it really is this question of whether or not this is a transitory period, and everybody hates that word when you hear it on an earnings call. But this doesn't necessarily have the same history in the meat environment in a cyclical or an economic downturn period as some of the more kind of historical meat, if you will.
Historical meat. Yeah, I mean, we had tofurkey on our Thanksgiving table.
Legendary meat.
OG meat.
Classic meat.
For the vegetarian in our house. But I learned tofurkey is made by a privately held company.
Tofurkey?
Tofurkey. It's not bad, actually. But anyway, it's by a privately held company. But we saw Beyond Meat shares just now trading a little bit higher today, but the stock is down 80% year to date.
You would have a better idea than me, probably, Julie. I saw 2 Beyond patties in Whole Foods for $5.75. That's pretty good. I mean, these used to sell for $8 a pop. Too expensive, though.
Yeah, I guess that is. I mean, it's funny to me that they sell them as patties because you can buy the pound of the stuff. Mm-hmm. And I guess they do that with ground beef, too. Like, it's so difficult to shape.
See, I knew you'd have more knowledge. You would have more
knowledge. I knew you would have. Nobody wants to do that.
I guess not. You just wash your hands afterwards. But yes, that is certainly than when they first came out. That is a lower price than we saw the introductory price when Beyond Meat was the new hot thing on the market.
Those
right?
photos. I like the plant-based food. I'm Impossible. I like Beyond. To me, it tastes great.
On your breakfast sandwich too?
Yeah, anywhere I can get it. Yeah.